Hello, everybody. Colin Casey here, Stonebridge Financial Partners Wealth Advisor, coming to you with a third quarter market update. Hope everybody's been enjoying the fall and the season changing. I know that my wife and we've certainly been enjoying it, spending a lot of time outside in this mild weather and also visiting the cider mills locally around town. We love a good donut from the cider mill. My personal favorite is the apple fritter at Yates. Not necessarily promoting them at all. They're not paying me to do so, but they only have them on Fridays. And if you've never had it, I would definitely give it a try especially if you're an apple fritter fan. Bringing you just highlights from the third quarter. We saw positive market performance in the third quarter. Interestingly, we did see the Federal Reserve Bank reduce interest rates for the first time. So they've been talking about it for a long time. They finally did it. Interestingly, we did see money market rates slightly come down, but we did see a slight uptick in longer duration fixed income rates. So what that's telling us is that the Fed is saying one thing, kind of doing another. They've sort of been saying they're going to do things and then change what they're going to do. So the markets are pricing in a different rate cut schedule than what the Fed is actually doing. So the Fed reduced rates, but we saw mortgage rates and interest rates slightly go up, which is certainly interesting. I still believe that the Fed's not going to significantly reduce interest rates until we see some kind of extreme market volatility or an economic pullback. Ultimately, there is optimism though for fixed income holders, for bond holders. Ultimately, when the Fed does start to reduce rates, it certainly seems like we're at that position. Going forward, we've seen cost of goods coming down. Not that the prices have been coming down, but the rate of which things have been increasing in cost has slowed down. So inevitably, the Fed's goal is to reduce rates. With that said, once that starts to occur, whether we see an economic pullback or if they naturally start to reduce rates to correlate with cost of goods, that ultimately means that we should see some price appreciation, hopefully in our intermediate or more long-term duration. So for most of us and most of the people in the world, there's record amounts of money that's sitting in cash. If we start to see that shift into the fixed income markets, that's ultimately naturally what we should see. And there's some opportunity there for fixed income holders that we haven't seen in a long time. However, in the very near term, with the disconnect between what the Fed's actually doing and where markets are priced, we might still see a little bit of volatility in the fixed income markets. For the stocks, bull market is hitting a 2-year anniversary. Believe it or not, we're still seeing valuations roughly in line, meaning that the stock market is not overpriced. We're seeing a little bit in the FANG stocks like the Facebook, Amazon, Microsoft, the 5 biggest stocks in the S&P 500, slightly higher valuation leading the way. But overall, the stock market seems to be relatively fairly priced. That's why we're still seeing the market go up. We're also seeing strong job reports, right? So people are not getting laid off necessarily, and more people are getting hired than what's expected. That's another reason why the Fed may or may not reduce rates more if we continue to see people going back to work rather than losing jobs. Consumer spending has also continued to stay strong, so people are still buying stuff, and most companies are meeting their earnings over the last third quarter. 2024 elections coming up certainly. History does show that the stock market doesn't care whether there's a Democrat or a Republican that gets elected, but certainly leading up to the market, we would expect to see some more market volatility. That's pretty normal leading into a presidential election. Good news is that 83% of the time historically during a presidential election year, the fourth quarter has ended positively for the stock market. So that's good news. The other thing is that historically, if we take economics totally out of the equation, then for the first and second quarter starting positive this year, generally speaking, the market ends positively. So fingers crossed, we'll see positive performance through the end of the year. But it's been an interesting third quarter, and essentially things are looking pretty good. Hang in there. I think maybe the political season and all the ads, right? We know that they're going to end relatively soon. So, at this point, recording this video, a week heading into the election. Hopefully, you can hang in there for just a couple more weeks. But again, Colin here. It's from Stoneberg's Financial Partners. It's a good time to revisit your portfolios, stick to your financial plans. Rebalancing is always a good thing. Stocks, fixed income, having the right mix makes sense based on your personal situations always. If you have any questions, we're here for you.